this shorts China, the top 35 stocks. Baba is number 2, had a lousy day the other day. This is ProShares short Xinhua China. I hope I'm pronouncing that right. This is YXI, and this also looks pretty. The 50-day is just coming up through the 200. The 200 is just about to turn up. Relative strength is improving. It was below 50 when I started looking at this. The volume is picking up, and here's what happened in the past. So if this retraces some of this, and with China's main 2 oil sources now heavily damaged and under the influence of the United States, I can make a pretty good case that China's going to have a really, really tough time in the foreseeable future. So I'm getting ready to short the Tencents and the Babas of the world via this ETF YXI, shorting the China 25 from ProShares. I have not pulled the trigger, but I'm real close.
Okay. Yeah, pull up the gold chart for a second.
Okay.
What do you think there?
I think it's got to hold this. This is obviously divided by 10, so it's got to hold 4,032. It's got to hold 4,000. Otherwise, you're starting to threaten the 200-day here, and that sends off all triggers. You have a gap down here, which is negative, and you've got all this volume down here that shows people are really wanting to leave the exits. But you can't be that surprised when you go from basically 2,000 to 4,000 in a year and a half. You have corrections. How bad this is going to continue to be, I don't know. But the more time it spends under 400 for the spies, and I'm sorry, for the gold GLD, and for the metal 4,000, the more time it spends below there, the tougher time it's going to have to get moving to the upside again.
Yeah, I mean, you have to think that it's being used as a piggy bank right now. That's kind of what's going on. Deleveraging plus, a lot of countries do. Look, when energy goes up, everyone realizes what real money is. And, you hear about these countries that are importing energy, but then their exports are going down and, might have to sell some gold, basically. And I think that's kind of what's going on there.
Yeah, you sell what you can, not what you want to.
I'm going to make a comment here, guys. Not that I could support it, but I think it's down 9 or 10 days in a row. And somebody posted on Twitter that's happened 3 other times. And the bottom was farther off and a lot more than the 10th day.
Really? Yeah. That's interesting.
So.
No, that's right. It's been very persistent since March 13th. It looks like.
Yeah, it's not good.
March 11th. Yeah, no.
But you know what? Hang on. I'm looking on mine. We can say not good and all that, but let's be clear. It's back to where it was at the beginning of the year. It had that blow off mood. So whatever. I think that sometimes we forget that. I was shorting all those bubble stocks in the October period, and I remember I shorted them after they'd already gotten hit, like Oklo. Pull up that Oklo chart as an example. I'll just use it as a teaching moment. Since we're not doing a lot of trading, might as well talk, about a concept here. You see that blow off top with the perfect head and shoulders, and I was hitting it right around there, around 150, or maybe a little bit before that, but somewhere in that right side, and then
just
like that. So yeah, exactly, right in there, and that's kind of what happens. Is okay, fine, yeah, it's gotten destroyed, but it's kind of where it was a year ago or something, right? Okay, these blow off tops always kind of confuse people of oh, that's where it was, but it's never should have been there type of thing. Does it make sense?
Yeah.
If we were to just say linearly, here's some rate of growth, it's kind of in the range of that. It's just that deviation to the top, and we saw that all over the place. So I don't know, not too much more to say about this stock, just using that as an example. But I mean, as we go forward here, what's your guys' playbook? Are you guys sitting here waiting for something, or are you going to wait for the war to end? Are you going to wait for, what's your kind of thinking as we're going out, not just